Hello everyone and welcome to the YouTube channel of BeingACCA. In this video, we are continuing with the PM Kaplan kit. So we are on the subtopic of decision making techniques. This is a syllabus area, and then under this we are starting with the questions from relevant cost analysis. So let's get started. UU company has been asked to quote for a special contract. The following information about the material needed has been given. So we can see over here that we have an original cost of $5 per kg. Now this is not relevant. Why? Because this is a historic cost and historic costs are not relevant. Then let's have a look at the scrap value. All right, we have replacement cost as well. And then the contract requires 10 kgs of this material. There are 250 kgs that we hold in inventory, which was purchased in error over 2 years ago. Now, if this material is modified at a cost of $2 per kg, it could be used as a substitute for material Y, which is in regular use and currently costs $6 per kg. So now we have to tell that what is the relevant cost of the materials for the special contract. So we see over here that this special contract is requiring 10 kgs of this material X. Now let's compare these costs. Now we do not have any intention to replace the material X. So that is why we will not be considering the replacement cost. Now there are two options that we have for material X. Either we can scrap it for $0.5 per kg, or we can use it as a replacement for our material Y. So if we are using this as a replacement, this material Y currently costs $6 per kg, and then we will have to modify it for $2. So if we see, we are saving $4. 6 minus 2 gives us $4 per kg is something that we are going to be saving. So now this option is something that we will be preferring, because either we can earn this much or we can save this much. So definitely I would like to save more money. So this is the option that we are going to be choosing. And then 10 kgs of material is required, so I'm just going to multiply 4 by 10, and that will give me my answer as 40, which is your answer. Moving on to the next one. VV company has been asked to quote for a special contract. The contract requires 100 hours of labor. However, the laborers who are paid each paid $15 per hour are working at full capacity. There is a shortage of labor in the market. The labor required to undertake the special contract would have to be taken from another contract Z, which currently utilizes 500 hours of labor and generates $5,000 worth of contribution. Now, if the labor is taken away from this contract, this whole contract would have to be delayed, and we have to pay a penalty fee of $1,000 if this is the scenario. Now we have to find out what is the relevant cost of the labor for this special contract. So it is mentioned over here that the labor is short. So we have to see what is going to be the opportunity cost, because whenever something is lesser in quantity, we have to see what is the next best use of it. So we can see that the contribution that we will be earning from this contract will still be earned. It will just be delayed. So we will still be getting this much contribution, but it will only be delayed. However, we still have to pay the penalty fee of $1,000. So the relevant cost, if we have to find out, basically will be the wages that the labor will be getting plus the penalty that we will be paying. So first of all, we will have to pay this labor $15, and this will be 100 hours. So this will be 15 multiplied by 100. So this will give you 1500, and then you will also have to take into consideration the penalty that you will be paying. So the relevant cost over here will be nothing but 1500 plus $1,000, which will give you $2,500. Moving on to the next one. An organization is considering the costs to be incurred in respect of a special order opportunity. The order would require 1250 kgs of material D that is readily available and regularly used by the organization on its normal products. There are 265 kgs of material D in inventory, which will which have costed $795 last week. Now again, this is a sunk cost because this is historic. The current market price is 3.24 per kg. Material D is normally used to make product X. Each unit of X requires 3 kgs of material D, and if material D is costed at $3 per kg, each unit of X yields a contribution of $15. So we have to tell over here that what is the relevant cost of material D to be included in the costing of the special order. So first of all, the first thing that we consider over here is that it is regularly used by the organization. So we will be, taking the replacement cost, because whenever something is regularly used in the normal course of the business, we will take the replacement cost. So the we can see that the market price is 3.24, which can also be considered as the replacement cost. And how much do we need? 1250. So my answer will be nothing but 1250 multiplied by the current market price or the replacement price, which is $3.24. So if I multiply that, I have my answer as 4050. Moving on to the next one, in order to utilize some spare capacity, K is preparing a quotation for a special order which requires 2000 kgs of material J. K has 800 kgs of material J in inventory, and the original cost is also given to us. Material J is used in company's main product. Again, this is something that they are using in the normal course of their business. Each unit of L uses 5 kgs of material J, and based on an input value of $7 per kg of J, each unit of L yields a contribution of $10. Now the resale value is also given, replacement is also given, and it is said that the material is readily available in the market. Now we have to, for the quotation, we require 2000 kgs in this specific contract. So since it is in regular use and also is readily available in the market, we are going to be taking the quantity that we require and multiply that by the market value or the replacement price, which is $8. So 8 multiplied by 2000 will give you $16,000. Moving on to the next one, a company is calculating the relevant cost of the material to be used on a particular contract. Now this contract requires 4200 kgs of material H, and the market value is again given to us. The company bought 10,000 kgs of material H some time ago when it paid 4.5 per kg. Currently 3700 we still have in the inventory. Now this inventory of material H can be sold at 3.2. Now this is the scrap value that we have for this material, and the company has no other use for material H other than on this contract, but it could be modified at a cost of 3.7 per kg and use it as a substitute for material J, which is regularly used by the company and can be bought at $7.5. So we have to find out what is the relevant cost of the material for this specific contract. Now we see over here that we require 4200 kgs, and we already have 3700 kgs in our inventory. So that means we have to first of all consider the cost for 37, which we have in inventory, and then the remaining comes out to be 500 kgs, 4200 minus 37, and this is something that we will have to buy. Now what we will have to buy is something that we will be buying at the market price, so that is why the 500, which we do not have at all, will be bought at the market value of $6.3. Now coming to what the treatment will be for the 3700, which we already have in our inventory. So we see over here is that the original price that is given to us is $4.5, and then see over here it is mentioned that the company bought it for $4.5 per kg. Now this of course is a sunk cost and it will not be relevant. Now this inventory can either be sold for 3.2, which is basically the minimum, that is the scrap value, this is the least that we can get. Now other this is the something which is the minimum. Now what is another use? Another use can be that we can spend $3.7 modified at a cost of $3.7, and this can be used for material J, which is regularly used, and the market price of this same is 7.5 per kg. So that means if we are spending 3.7 on something, we will be able to have a value of 7.5. So that means we are going to be, saving $3.8. So that is why I will multiply 3700 with 3.8, and this is the sum of both of these will give me my final of what is relevant for this contract. And if you solve this, you will have your answer as 17,210, which is option A. Moving on to the next one, ACE Limited is considering a new project that will require the use of a currently idle machine. Now, this machine has a book value of $12,000, disposal value of 10,500 before $200 of our disposal costs, and hence has been under depreciated by $1,500 over its life to date. If the machine is fit for purpose on the new project, it will have to be relocated at a cost of $500 and refitted at a further cost of $800. Now we have to find out what is the relevant cost of this using this machine on the new project. Now what all will be relevant to us over here is, first of all, we will be if we are using this machine on this project, we will be losing out on the disposal proceeds. So the disposal proceeds will be 10,500 and 200 will be the disposal cost. So basically the net proceeds that I could have had if I was not using this machine on this project would have been 10,300, which is nothing but 10,500 subtracted 200 to arrive at the net disposal proceeds. Now if we are again using this machine, we will be relocating it at $500, and again there will be a cost of $800 to fit it. So basically additional cost that we will be incurring to set up this machine will be 500 and 800. So if I add all of this up, this is something which will be my relevant cost for using this machine on the new project. And if you total all of these up, you will have your answer as 11,600, which is option C. Moving on to the next one, Blunt is considering a new project but is unsure how much overhead to include in the calculations to help him decide whether or not to proceed. Existing fixed overheads are absorbed at the rate of 8 per hour worked. Blunt is certain that the project will involve incremental 500 labor hours. Now, the project will involve extra machine running costs, and this will cost him $4 per hour. The number of extra machine hours is expected to be 450 hours. The difference between this figure and the 500 labor hours is expected idle time. Now, the project will require a little more temporary space that can be rented at a fixed cost of $1,200 for the period of hire. This overhead is not included in the fixed overhead absorption rate. So, we have to find out what will be the overhead that will be charged for this project. So, first of all, this rent is specifically for this project, so this is relevant. Whatever we do, this has to come in the calculation. Now moving to the extra variable that we will be spending, the variable overheads, we are spending the extra machine hours are going to be 450, and that those 450 hours per hour, we will be incurring a cost of $4 per hour. So I will multiply 450 with 4, and this will give me $1,800. Now this is my total. If I add both of these up, 1,200 and 1,800, I will have my answer as 3,000. Now the fixed costs which are not incremental and the ideal time will usually signify that the machines are not being used. So that is why this is not going to be our overhead, so we will not be taking it in the relevant cost. Moving on to the next question, Clever Logs is short of labor for a one-off project needing 600 hours of labor and has choices as to where to source this. They could hire new people temporarily from an agency at a cost of $9 per hour. Alternatively, they could recruit new temporary staff at a fixed cost of advertising of $1,200, but then only pay $6 per hour for the time. They could also redirect staff from existing work who are currently paid $7 and who make sandals that generate a contribution of $3 per hour after all the variable costs. Sandals are a good selling product, and Clever Logs will lose the production and the related sales whilst the staff is working on the new one off project. Now, we have to tell that what will be the relevant cost for the labor. So, if we go with the agency option, so the agency is going to be taking us 9 per hour. So this will give you 600 multiplied by 9, and that comes out to be 5400. This is our first option. The second option is our new staff. First of all, we have an advertising of 1200, and then we will be paying them $6 per hour. So 6 multiplied by 600. So if you total both of these up, 6 6 are 36, 3600 plus 1200 will give you 4800, right? And then the last option that we have is our internal transfer. So if we redirect some staff, 7 will be something that we will be paying them, plus we will be losing out on a contribution of $3. So that means net effect will be $10 per hour. So $10 multiplied by 600, and this will give you a cost of $6,000. So definitely I will be going for the least option where I am incurring the least cost, and that is when I am uh, putting the advertisement and paying the labor $6 per hour, and that gives me my answer as $4,800. Moving on to the next one, Drippy is producing a list of relevant cash flows regarding a decision they have to make. They are considering launching a new type of USB memory stick that guarantees better protection to the host computer. Drippy manages many existing products and has a standing agreement with the technology magazine for advertising space, entitling them to advertise each month. The contractor has just been signed and covers the next 12 months. The payment is made in the month following an advertise appearing. Drippy is going to use the magazine to advertise their exciting new USB stick. As regards to the relevant costing principles, what would be the best description for the cost of the advertising space? Now, what exactly we have to tell over here is that which kind of cost is the cost that we have incurred on the advertising space. So basically, this will be a committed cost over here. Why? Because this is some cost that we have, entered into an agreement, and this will be incurred regardless whether or not we advertise the USB stick or not. So this will not be a sunk cost. The more exact description that fits over here is the committed cost, because the what happens in sunk cost is something where you have already made the payment, but over here you have not made the payment is going to be made in the month following the advert appearing. So that is why this will not come under sunk cost, and hence it fits better into the description of a committed cost. Moving on to the next one, which of the following terms would not normally be used to describe a relevant cost for a decision? So, not normally be used. Incremental is something that we use for relevant costing, future costs also, cash flows also. Now, material is something which we will not normally use to describe a relevant cost for a decision. Now, moving on to the last question that we have under this topic, XPLC intends to use relevant costs as the basis of selling price for a special order. The printing of a brochure. The brochure requires a particular type of paper that is not regularly used by XPLC, although a limited amount is in XPLC's inventory, which was left over from a previous job. The cost when XPLC bought this paper last year was $15 per ream, and there are 100 reams in inventory. The brochure requires 250 reams. The current market price of the paper is 26 and the resale value is 10 per ream. So basically we will again have to split over here. First of all, we require 250 reams in total. We have 100 reams in inventory. So 100 will be another treatment, and the remaining 150 again will be bought at the market value. The market value is nothing but 26. So now let's decide what will happen with something which we already have in the inventory. So the cost when we bought this last year, $15, is actually a sunk cost, and that is why this will not be considered. Now this is already happened, so we are not concerned with this anymore. Now for the 100 reams that we already have in inventory, we could have sold this is the best use that we have. We could have sold this at $10 per ream. So this is something, if we are using this for this project, we will not be getting the $10 per ream that we could have gotten for the 100 reams that we had in our inventory. So 100 will be multiplied by 10 and 150 will be multiplied by 26. The summation of both of these will give you your final answer for the relevant cost, and if you add both of these up, you will get your answer as 4900, which is option B. With this, we have come to an end to this topic. In the next video, we will be solving CVP analysis questions. Stay tuned for the next one. Thank you for watching.